Okay, look, quick one today, and I'm warning you, it's going to be pretty dry, so sorry about that. This is just a very quick summary of Canoo's recent earnings call. And look, the unedited version's almost an hour long, so I don't know if you care, but not that much. Well, this video is for you. Otherwise, you can find the long version like elsewhere. The Q3 2023 earnings call began by acknowledging it was being held at the Oklahoma City facility. The agenda included updates from Fast Tony, the CEO, on business progress, Greg Etheridge, the CFO, on sales and financing, and Ramesh on the Q3 financial results. The participants cautioned that they might make forward-looking statements but emphasized the potential risk and uncertainties. They encouraged referring to their recent disclosures for a comprehensive discussion on factors affecting future financial results. They also highlighted the discussion of non-GAAP financial measures during the call with a reference to where the reconciliation of these measures to GAAP could be found on their website. Tony, the CEO, spoke about the challenges and opportunities in the market, emphasizing the importance of innovation and determination. He discussed their strategy of focusing on commercial customers first to rigorously test and improve their products. In terms of manufacturing milestones achieved in Q3, he mentioned that on July 27th, they hit a 20,000 unit run rate for their battery modular line. On July 31st, they achieved a 20,000 unit run rate for the robotics and assembly line for ladder frame equipment. On August 17th, they received an EPA permit for their Oklahoma City facility. On November 10th, they completed the commissioning of equipment for both the ladder frame system in Oklahoma City and the battery modular system in Pryor. And on November 14th, they updated the general assembly system, was on track to achieve 20,000 unit run rate for Q1 2024. Greg Etheridge, CFO, provided an introduction and highlighted the pivot in their business model to focus on commercial and government customers. He mentioned that they generated approximately $519,000 in revenue in Q3 2023. Then he also discussed their cost of revenues, including vehicle components, labor costs, and tooling expenses, leading to a negative gross margin of $384,000, primarily due to the initial vehicle deliveries and increased logistical costs. Greg highlighted a 61% reduction in research and development expenses and a 49% reduction in SG&A expenses compared to Q3 2022. Their GAAP net loss for Q3 was $112 million, while adjusted EBITDA improved to a negative $40.4 million compared to a negative $80.8 million the prior year. The adjusted EPS was a negative 7 cents per share for the quarter. In terms of cash flow, they ended the quarter with $8.3 million in cash and cash equivalents, which would have been $53.3 million if the effect of the issuance and sale of preferred shares and warrants were included. Cash used in operations for the 9 months ending in September 30th, 2023 was $191.4 million, with capital expenditures of $45.4 million. Net cash provided by financing activities for the 9 months ended September 30th, 2023 was $208.9 million. Ramesh Murthy, the CAO, discussed the results of Q3 2023 and mentioned that they became a revenue-generating company in that quarter, generating approximately $519,000 in revenues. He noted the cost of the revenues was $903,000 and explained that the negative gross margin was primarily due to custom-built initial vehicle deliveries to NASA and increased logistical and freight costs. Ramesh also provided revised guidance for the second half of 2023 with negative adjusted EBITDA expected to be between $85 million to $105 million and CapEx ranging from $30 million to $40 million. This guidance represents a 30% improvement in adjusted EBITDA compared to previous guidance. In conclusion, Tony thanked the company supporters, the Canoo team, and partner suppliers for their flexibility and support during this phase.